This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, along with our co-host, Shelley Brown, and we've been selling homes here in Southern Nevada since 1988. Shelley and I are also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. With us in studio now, we have Kari Phillips from Southern Fidelity Mortgage. She's their top loan officer, and she graduated with a bachelor's in marketing and has an MBA. She's been a loan officer for 18 years. Kari, welcome back.
Thank you for having me again.
So glad to have you back. You know, we wanted to talk about some of these terms within the mortgage a little bit, like mortgage points. You know, what's a point?
In our industry, you know, rates are advertised all over town, and you know, internet and TV, radio, everywhere. And It just makes me laugh because I've talked about this in another program. There are 24 things, you know, that go into an interest rate. There's about 8 main things. But, you know, an advertisement with, let's say we have a 15-year mortgage and the interest rate is 2.65. I saw this yesterday online. Interest rate 2.65. Well, underneath it, it says 2 points.
Right.
That means that if you as a consumer want a 2.65 rate and your loan amount is $100,000, you're going to pay 2% of the loan amount to get that rate. So you're going to pay a $2,000 fee to get 2.625 rate. But
above and beyond the other normal fees.
Correct. Above and beyond those normal fees.
Right.
So a consumer really has to watch that because it can be deceiving. A lender can say, yep, you have a 2.625 rate. The client comes in, the lender passes the $2,000 on their sheet. They close, the buyer thinks they got a great rate. Well, my belief is you got to mathematically figure out, is buying the points worth it? So if you don't pay 2 points, and let's say your rate is 3.1, and with no points,
right?
How long does it take you to make up that $2,000?
Right.
So, for example, let's say you save, I'm just thinking, $25 on the payment. You know, if you divide 2,000 divided by 25, what is that?
It's $400. You got $400 a year, so it's going to take you 5 years to make that back.
5.5 years. If you say to yourself, you know what, we're not going to stay in this house for more than, you know, a few years, my advice is do not pay the points. You're paying for something that you may or may not make up for. Also, the normal human behavior, if you go, and statistics will show this, the normal human behavior is to do something in the first 5 years. Refinance, cash out, sell, you know, do something with your mortgage. So it's like, to me, you're creating a risk to go to a dinner party and say, I got a 2.625 rate. It's really fun to say, but does it mathematically make out for you and in your situation? We at Southern Fidelity Mortgage, we don't charge points. If a client wants it, we obviously do the analysis, but it's just usually not worth it, and it's a very high fee, as you can see.
So I want to clarify this a little bit. So a point is 1% of a loan amount.
Correct.
Okay. So could I call it interest paid in advance to get that rate? Or what's another easy way to reference it so buyers can understand what it means? You're buying down the loan rate.
Right.
You're buying down the loan rate, so you're paying $2,000 to save on finance charges over the long run.
You've been listening to Las Vegas Real Estate Now with hosts Harvey Blankfeld and Shelley Brown. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.